All right, guys. So welcome to the United Healthcare training. UHC is going to be a big part of what we do. It always has been. It always will be. They are a very, very strong competitor in the individual health space, and they actually led the way when it came to the big dogs, all the big dog companies getting out of the marketplace. United Healthcare was one of the first big dog company, possibly the first big dog company that got out of the marketplace and said, you know what, we're not going to try and figure out Obamacare, and how to be profitable there. We know we can develop products that will be competitive for people that Obamacare doesn't work well with, and that's the market that we're going to focus on. So, guys, that's our market. Obviously, that's our target market, and United Healthcare has put together a hell of a portfolio in that market. So we're going to talk about those products, two of them specifically today. We're going to go over the short-term medical product, okay? And we're going to go over the limited medical product. So, guys, if you've been paying attention, you know that when somebody is on the individual health insurance market, they've got, realistically, there's three options for their insurance, right? You've got Obamacare, which is the marketplace. You have to, purchase those plans during an open enrollment period or have a qualifying life event if you're outside of the open enrollment period. You've got short-term medical plans, which you can purchase all year long, and you've got limited medical plans, which you can purchase all year long. Another option that's actually becoming more and more popular is the Med Sharing programs, the Minister Med Sharing programs and other Med Sharing programs, but you can't call that insurance because it's not insurance, it's sharing. And those sharing companies, they don't even let you call them insurance, call it insurance. And the thing that scares me about those sharing companies is, not to get too far off track, but the thing that scares me about those companies is in every single brochure you read, it blatantly says sharing is not guaranteed, right? So me personally, when I'm insuring my family or I'm insuring my customers, I'd rather have the, signed contract with the insurance company that's worth billions of dollars and is going to pay my, mine and my family's claim or my customer's claim when they need it. So you guys know our primary focus is the top insurance carriers in the individual health market. We've done a lot of research and to find these top carriers, and United Healthcare definitely fits the bill. They've got some of the top products in this market, and they're certainly a leader in the industry. There's no doubt about it, both in the Medicare space, the senior market. You've heard of AARP. AARP is United Healthcare, Medicare plans, and then obviously in the under 65 market, which is our target market. So guys, let's get into it. All right. You'll get appointed with United Healthcare. You'll get a username and password. Actually, you'll get a writing number, which a lot of times is your NPN number. And you're going to do everything from the uh1.com website, okay? So this is the site, uh1.com. And to log in, you'll go to Brokers, Login. And you'll put, for the first time logging in, you'll be able to set yourself up with the username and password, and you get yourself signed in to the e-store. So everything you sell is going to be done through this portal. All the business that you write, you'll be able to see on this portal. You'll be able to, service your customers through this portal. So everything is going to be done through uh1.com. All right. So I'm going to come back to uh1.com after we go through the products, and I'm show you guys how to quote these things and how to enroll a customer. But first, let's just dive right into the products. And like I said, two main products we're going to focus on, short-term medical and the limited medical product, which is called Health Protector Guard. So first, let's look at UHC short-term medical, okay? Guys, the UHC short-term medical does act as a major medical product. Like I said, when training with the National General product, the reason we sell National General short-term and UHC short-term is because they really are major medical products. They're short-term major medical, but they work very similarly to a major medical. And there's companies out there that are marketing short-term plans, and they're actually limited med products. Where they cut the coverage off at so much per day in the hospital. They only give X amount of dollars for specific surgeries or organ transplants or things like that. UHC serves as a true major medical product, just like National General does. So, reviewing how a major medical works, guys, you have your deductible option, which is the customer's responsibility first and foremost. They pay their deductible. Then there's a co-insurance option, which is your 80-20, your 70-30. I'm sure you guys have all heard those terms. And you have a defined maximum out-of-pocket amount, okay? So just the opposite to a limited medical policy, right? A short-term major medical you'll have a deductible and a co-insurance with a defined maximum out-of-pocket amount. Could be $5,000, could be $10,000, but as a customer that the $5,000 or the $10,000 mark is the most that you could pay for your health care, right? For any claims that you have. If you have a $10,000 maximum out of pocket, once you reach $10,000 in bills that are your responsibility, then your insurance is going to kick in, pay 100%, up to the lifetime maximum, okay? So let's look at the UHC short term. First of all, guys, before I even get into the highlights of the product and going through this, I touched on it a little bit. I really just made the statement that short-term or that UHC is going to be a play in your portfolio, but the reason for that, guys, is the brand name. I mean, it's simple. When you really put the products side by side, and you guys hear me talk about this all the time, Philadelphia American, you can really load somebody up with benefits with Philadelphia American, right? A lot of times the objection that you're going to get to Philadelphia American is the fact that people have never heard of it, right? When people, you got to keep in mind too, 180 million people or 200 million people in our country have group health insurance. So the big dog companies, big dog health insurance companies are the main players in the group health space. So Aetna, Blue Cross Blue Shield, United Healthcare, Humana, Cigna. I mean, these are the names of carriers that people are used to hearing. So if you're selling Philadelphia American, a lot of times the objection to that product is going to be, well, I never heard of Philadelphia American, and it just doesn't make me feel comfortable having them as my insurer. And that's cool. And that's when I'll flip to United Healthcare. Well, Mr. Jones, I'm sure you've heard of United Healthcare. It's the largest health insurance company in the country. $170 billion company or whatever it is. People have heard of UHC. They know the brand name United Healthcare. So, there's been a lot of presentations that I've made in my career where, I'm selling, Philadelphia American, or I'm selling, National General, and, customers never heard of it. I take them to UHC. I show them the UHC plan, right? And then I show them exactly why I was selling Philadelphia American in the first place, or National General in the first place, and why I think it's a superior product. And, 9 times out of 10, they're going to go that route and get what I initially prescribed to them. But you're always going to have your customers that just want to be insured with a, very reputable company. And there's absolutely nothing wrong with that. And there's absolutely nothing wrong with you as agents making United Healthcare your go-to plan. right? If you want UHC to be your lead-in, right, whether it's because of the brand name or because of the benefits that I'm about to go over with you and all these plans, you just think they're top notch. And, again, you have to sell what you believe in, right? And that's why, we're brokers as opposed to captive agents. And when we bring agents in, we don't just, shove Philly down their throat and say, sell Philly, 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 right? I will tell you why I personally think Philly's the best option in the market. And most of the time I can put the plan that you're marketing up against it and show you why. But again, guys, there's absolutely nothing wrong with working with United Healthcare primarily and going in to your presentations selling United Healthcare. So, all right. So I'm making that point anyway. It's a great product, and obviously with the brand name makes it a little bit easier to sell. So let's look at the short term, guys. All right. There are 8 plans with the short term, okay? And 4 of them have a $600,000 lifetime maximum per person, and the other 4 have a $2 million lifetime maximum per person. So obviously you guys, it doesn't take a brain surgeon to know that the $2 million plans are going to be a little bit more expensive than the $600,000 plans, all right? The majority of the plans, everything is going to be, kind of similar to National General, where everything is subject to the deductible and coinsurance, right? Same holds true with UHC short term, with the exception of you have the option to add copays to the doctor, okay, with UHC. So just running down this stuff, guys, real quick. Every state varies, in terms of how long they offer short-term plans for. So, Illinois is a 6-month state. Georgia is a 3-year state. So, and we're going to talk about that more in a minute here, but there's, these plans, these short-term medical plans are now going to be available to market for 3 years at a clip. All right. So where you're renewing your customer every 12 months, in the 12-month days, guys, in the 12-month days were good days. And renewing those customers every 12 months. Now you'll be able to sign a customer up on a short term for 3 years. All right. So those plans are coming at some point this year. I just got some communications from National General that, there's a couple of 2-year plans that they're getting started with in a couple of states. And if you guys are appointed with NatGen, you might have gotten the same email. But going through the details of these policies, again, guys, 90% of the majority of the benefits are going to be subject to the deductible and coinsurance. And you'll see in the quoting software, you could actually pick what the deductible, what you want the deductible to be. And in some of the plans, you can even choose the coinsurance. You can choose a 70-30 or a 60-40, an 80-20 or a 60-40, as you can see on the value select and the plus select here. All right. If you're selling a $600,000 lifetime maximum plan, and that's per person, in the copay select, the copay select plan is, and it's right there in the title, guys, copay select, is the plan that will offer copays to the doctor, all right? And that is 1 copay per 90 days of coverage. So if you have a 3-month plan, you'll have 1 doctor visit covered at a $50 copay. If you have a 6-month plan, you get 2 doctor visits covered at a, $50 copay. If you have anything from a 6-month plan to a 12-month plan and obviously a 36-month plan, then you'll get 3 per year. All right. So 3 copays per year. If you exceed those copays, then you're right back to everything being subject to the deductible and the coinsurance. All right, guys. So, when looking at these policies, it's pretty simple and self-explanatory. Obviously you guys are insurance agents, so you have a good understanding of what a deductible is, what coinsurance is and how that works. So again, You've got two lifetime benefit levels. On the short term, you've got a $600,000 annual maximum. You've got a $2 million lifetime maximum. Excuse me, not annual maximum, but lifetime maximum. And those are per person. You do get, across the board, you do get $75 copays to the urgent care, okay? Guys, these plans are designed now. You look at National General, you look at UHC, you even look at some of the marketplace plans. These plans are designed to get people using the urgent care clinics more and more. They want to keep people out of the primary care doctor clinics for sicknesses. They just want primary care doctors to worry about primary care, right? They don't want you going to the emergency room for every little thing and clogging up the emergency room. So they're really giving incentives to go to the urgent care whenever possible for, you know, the typical day-to-day sickness, the injury that you don't feel like you're going to need to be hospitalized for. Go to the urgent care whenever possible. So you got $75 copays to the urgent care. Again, kind of like NatGen. NatGen has $50 copays to the urgent care. Everything else with NatGen is subject to the deductible and coinsurance. Same thing on a UHC short term, unless you choose the plan that offers copays to the doctor, which in that case, it's a $50 copay, and you get one for the first 90 days, a second one for the next 90 days, and a third one for the rest of the year, okay? And the only difference really between the $600,000 plan and the $2 million plan is that lifetime maximum, okay? If you come down to the $2 million plan, you can tell you still have the same $75 copay to the urgent care, okay? And you've got the $50 copay in the copay select plan, all right? Copays work the same way. One for the first 90 days, a second one for the next 90 days, and a third one for the rest of the year, okay? If you guys notice, when you go to the ER, there's a $250 copay, right, on both options. So again, you know, you want to tell your customers, and you know, your customers will stay with you, you know, as long as you make sure that they're aware of what they're buying, okay? And as an agent, guys, you can't be afraid to give your, you know, you give your customer bad news, right? Like they're looking through this brochure and they say, wow, a $250 $250 copay when I go to the ER, what's that all about? Well, Mr. Jones, it's a $250 copay. In other words, it's an access fee, right? So, you know, I strongly encourage you to go to the urgent care whenever possible, right? If you think you're sick to the point where you need to go to the hospital and you're going to be admitted, go ahead and go to the emergency room. If you've got a bone sticking out of your skin, you know, you broke your leg and it's literally sticking out of your leg, your bone is out of your leg, go to the emergency room, all right? $250 shouldn't turn you away when something crazy like that happens. But again, guys, keep in mind, this is the base plan, right? Every time we sell a base health insurance plan, we're always adding supplemental products to make the coverage better for our customers, right? And we're not at that point yet. We're just talking about the base plan. So again, guys, the base plan, 90% of everything is going to be subject to the deductible and the co-insurance. And once we get to the quoting platform, you guys will see how you can pick and choose some of those levels on some of these different plans. You get $75 copays to the urgent care. You get $50 copays to the doctor if you choose a copay plan. And, you know, again, everything else subject to the deductible and co-insurance. And then when we add those supplemental products in there to cover those out-of-pocket expenses for accidents and critical illnesses and being hospitalized, you know, that's how we really give our customers top-notch coverage, right? One thing I want to point out on these plans, guys, and you're going to see it again when we get to the quoting platform, is the accidental benefit, okay? There is an accidental benefit that you can add 2-year short-term policies. It's a rider to the short-term, and whatever deductible you choose, all right, you can add an accident plan to mirror that deductible, okay? Again, effectively giving you, covering most of your out-of-pocket costs for the event of any accident or injury. You guys can do that if you want. I'm telling you, you probably don't want to for a couple reasons. One, it's just an accident plan, right? You can get better accident plans outside of the short-term rider that will offer more coverages. And I'm going to show you guys specifically a UHC supplement that's pretty solid. We talk about National General supplements being typically far superior to any other supplemental products out there. So, if you can, if you have a customer, you want to sell them a short term with UHC, get the NatGen subs in there. But, to make life easy on yourself, and I understand it's all about simplicity as an insurance agent, is for me, always was when I was a personal producer. I would sell the supplements right off the UHC portal, but you want to sell supplements standalone. Okay, you don't want to sell the accident rider with the short-term plan because again, it's just going to be an accident benefit that mirrors whatever deductible level you choose, and you're going to want to sell that accident plan separate. Okay, so a standalone accident plan for 2 reasons. Number one, it's going to provide more benefits than just an accident benefit. And number 2, it's going to pay you more, okay? You add the supplemental accident benefit here, you're getting paid whatever your level is on the short term. It just increases the premium, okay? You sell an accident standalone, now you're getting paid the percentage of whatever, that supplemental product, whatever the percentage of that. And supplements are always more in commission than the standalone, okay? And again, there's also more benefits to it. So it's better for the customer, better for you, not to sell the accident rider on these plans, but to sell the accident plan standalone, all right? This is talking about the accident rider. Other thing, to touch on, guys, is the network that is used for the short-term plan, all right? It's the United Healthcare Choice Network. Just as good as any other PPO network out there, man. I mean, there's probably 99% of the time if a customer says, I don't know if my doctor accepts it, and you go ahead and shop the United Healthcare Choice PPO network, again, 99% of the time that doctor is going to be in the network, and it's all good, right? So if they are paying something out of pocket, let's say they go with a plan that's not a copay plan, right? And they've got to pay their doctor visits out of pocket. Again, as long as their doctor is in the network, then they're going to get that discounted rate, that pre-negotiated PPO discounted rate. All right, guys. So, again, not a whole lot to dig into and go over with the short-term plan. As long as as a health insurance agent, you understand how a deductible works, which I hope you do. If you don't, call us. We'll walk you through it. You understand how co-insurance works. That's your 80-20, your 70-30. So, and you understand, what it means when we say everything is subject to the deductible. In other words, you got to pay your bills until you reach your deductible before any insurance kicks in. All right. And then once you hit your deductible, your co-insurance kicks in, whatever you're out of pocket on your co-insurance is, you satisfy that. Now you have no more bills. You're covered fully for the rest of the year. Okay. All right, guys. So that is the short-term product. Okay. There's obviously a lot more to read. When you're looking at this brochure, I strongly suggest, going through the brochure and having a good understanding of at least the state that you're primarily marketing in, what's available, right? So in other words, you got Illinois, and that's what's cool about this brochure. A lot of the carriers don't do this in their brochure, but they'll tell you if, you know, if it's not a straight 364-day plan, right? If there's not a straight 12-month option available, which anywhere there's a 12-month option available, guys, they're going to have a 36-month option available. So wherever there's not going to be a 36-month option available, you can go right to this brochure and it'll tell you exactly what is available. So in Arizona, you've got 30 to 184 days, excuse me. Florida goes up to 360 days. Illinois, we talked about, is a 6-month, 180 days. All right, and any other states that have a variation, you know, other than the 12-month plan is going to be on this brochure. All right, guys, so you can answer those questions very quickly as far as what's available. All right. So, guys, again, that's short term. You know, pretty straightforward, pretty self-explanatory. It's a great policy. The network is very good. United Healthcare is excellent with paying claims. You know, we've got some. You know, we've done a lot of business with United Healthcare over the years. We've had, you know, experience with customers putting in claims. We've got some customers that are, you know, absolutely thrilled about their health insurance. I've got some customers that have United Healthcare that I couldn't pitch them Philly and get them off United Healthcare if I wanted to, you know, because they really, you know, they really take care of their customers over there, and they have a very, very simple process for claims and things like that. So customer service is good, brand name product. You know, and obviously, you see the coverages here on the brochure. All right. So, again, guys, short-term medical plans act like major medical plans, okay? They just have an expiration date, right? And that was my biggest deterring factor to selling them is the expiration date, because I actually had a customer that you know, was diagnosed with cancer, and their short-term policy ended in the middle of the year, right? So, you know, they were in a bad spot, you know. They luckily had a critical illness policy along with it, which helped. But, you know, I said right then and there, I'm never going to put myself in that position again, right? But with the 3-year option, the 3-year option is obviously a very, very good one, all right, guys, because you know, who knows what's going to happen in our industry in the next 3 years. You can really lock somebody in for 3 years now. You know, again, once it's available in all the states it's going to be available in. Right now, they've just rolled it out in Georgia and Arkansas, I believe. It's either Arkansas or Alabama. So Georgia for sure, and one of those two A states. So that's short term, guys. All right. The other product that is very, very popular with United Healthcare is the Health Protector Guard, okay? And the Health Protector Guard is a limited med plan, very similar to Philadelphia American, right? And, you know, it's important that you understand how a limited med plan works. It's just the opposite with a limited med plan than it is with a major med plan, okay, whether it's short-term major med or major med from the marketplace. With a major med plan, you're responsible for your out-of-pocket maximum up front, right? And then the insurance kicks in on the back end. With a limited med plan, you get your benefits up front, okay? And then whatever's left over after your benefits paid, right, after the discount, the PPO discounted rate, the benefits payout, and you know the advocacy group negotiates the bill down for you. Then whatever's left over is your responsibility. Okay, so again, limited med, it's in most cases a zero deductible. The Health Protector Guard is a zero deductible. There's no deductible to meet, so you get the benefits up front, plus the PPO network discount, and then whatever's left over is your responsibility. So, guys, same thing with this plan. I've got customers that have the Health Protector Guard, and they absolutely love it. You know, they go to the doctor, they get $100 each visit that they go, and they don't pay a penny out of pocket. They're like, man, this is the best insurance I ever had. So guys, if your customers, if they never have the big one, right? If they never have the shock claim, the $500,000 heart attack, or, the $1 million cancer treatment, if they don't have that, and it's just the typical, broken finger, stitches needed from cooking, and you slice your finger, the typical illness that you need antibiotics and you just want to go get your wellness checkups. Guys, limited med plans work perfectly fine for those instances, right? And, if you really want to give them the best of both worlds, right, you literally, the way you give a customer the best of both worlds, you give them a zero deductible limited med plan, and you give them a high deductible short-term med plan, all right? So now they've got zero deductible, first dollar coverage, get all their benefits up front. If they do have the big one, the big claim, they've got that umbrella policy, covering them and taking care of them. So, guys, that would be something that we talk to you more on an individual basis, and not trying to confuse you now, but that really is the best option for customers, when in the off exchange world, is the best of both worlds. Get the major med component, get the first dollar coverage component, and you're off and running. But let's dig into the Health Protector Guard, all right? Health Protector Guard is, again, it's a limited med policy. The network that is used is the multi-plan PPO network. And guys, if you ever, look in our back office, which is under construction today, you'll see we've got, the multi-plan PPO network, PHCS, Aetna. We're going to add the United Healthcare network to this, so you guys can literally just click into, multi-plan and go shopping for doctors and hospitals for your customers. When you're shopping for doctors and hospitals, guys, you really have to make sure that you have the proper spelling of the doctor's name or of the facility's name. You also need to make sure you have the proper zip code. So a lot of times when a customer tells me what the name of their doctor is, see if I can go back to that, tells me what the name of their doctor is, then I actually Google it before I look it up. I'll jump over here and, Google the doctor's name, Dr. Jones in Illinois, and, I'll get the exact doctor, the exact address. So then I'll come back here. I got the exact spelling. I'll stick their name in there, Dr. Jones, get the exact zip code. I didn't see what it was, but whatever. And then 99% of the time, then that doctor is going to pop up. If you, happen to put a doctor's information and you don't find them in there right away, and this is any network you shop, guys, whether it's the Aetna network for NatGen, the United Healthcare network for UHC short-term, the multi-plan network for the Health Protector Guard, or the PHCS network for Philly. Any network you're shopping, if you can't find them in the search, doesn't mean they don't accept the insurance. Just means that, maybe they moved offices recently, right? It might not be updated. So, don't let that ever be a deal breaker, right? If it comes down to customer likes the coverages, everything that you're talking to them about, and you go to shop the network and you can't find the customer's provider in the network, don't let that kill the deal. All right, call the doctor's office and make sure that they accept the PPO network to the plan that you're offering them. And if they don't, then don't be afraid to give the customer bad news. Sorry, Mr. Jones, they don't take this. Do you want to look at, let's look at either some other plans, or are you okay with paying full boat, right? Or not getting the discounted rate. So the way a limited med plan works is no matter what, we'll just look at this benefit first, okay? Because it's the most common benefit, office visits, doctor visits, okay? Looking at the select preferred, you can see there's several levels, right? 10 visits a year, $100 a pop when they go, all right? So if a doctor charges $150 and they're not in the PPO network, the customer will still get $100 for going, but they're going to be on the hook for 50 of it, right? most of the time that $100 is going to cover the doctor visit fully if they're in network, because most doctor visits, pre-negotiated rates are under that $100 threshold. Okay, and I hope that makes sense. So again, if you're shopping the multi-plan PPO, you find the doctor in there, 9 times out of 10, that pre-negotiated rate is going to be under $100. All right. So let's look at these benefits real quick, guys. Health Protector Guard, you've got, what do you got here? 1, 2, 3, 4, 5, 6, 7 different levels of Health Protector Guard. All right. It's a 0 deductible plan. You've got your inpatient benefits, okay, which are increasing after year 2. They're increasing for injury, okay. So if you go with the most popular plan on this, guy, so you know, is the primary preferred. It's the $4,000 a day plan. If you get to year 2, and that's $4,000 a day for sicknesses or injuries. In year 2, you get $5,000 for injuries. In year 3, you get $6,000 for injuries. So the per day benefit goes up. Each year you have the plan up to year 5 for injuries, okay? Not for sicknesses, just injuries, all right? So that's your inpatient coverage. Inpatient physician fees, if you're in the, if you've ever seen a hospital bill, you're getting billed room and board, and then you're getting billed the doctor that came in and saw you, you're getting billed for that visit. You're getting billed for the anesthesiologist. Might have been billed for the ambulance ride over there. So you can see that, there's benefits for everything that you do or everything that, could be done. So you get $100 for the inpatient doctor visit, right? You're in the hospital already. Doctor comes in to talk to you. You get $100 for that visit. Emergency room, $300 just for walking in the door. So again, on the short term, right? On the short-term plan, you pay your out-of-pocket up front, and then your insurance kicks in, right? You have a $250 access fee just for walking into the emergency room. On a limited med plan, you're getting $300 just for walking into the emergency room, okay? Ambulance, ground and air, you guys can see that, okay? Surgical benefits, okay? Surgical benefits is on a tier schedule. So you have tier 1 surgeries to tier 4 surgeries. This is how I beat Health Protector Guard with Philadelphia American, by the way, guys. Every single time I've put, not every time, but 99% of the time, I've put a United Healthcare plan up against a Philadelphia American plan. The Philly plan beats them in the surgery benefit. All right, and I'm not crazy about the surgery coverage with Health Protector Guard, and I'll explain a little more in detail right now what it means. So, a tier 4 surgery, guys, is an outpatient, something not too serious, kind of like a hernia would be considered a tier 4 surgery. So you're going to get $500 worth of benefits for that hernia surgery. Okay, you'll get 20% for the assistant. There's always a first assistant in surgery, right? So you'll get 20% of they get $100 in other words for the assistant, and you get 30%, which is $150 for that specific surgery for the anesthesiologist, right? So that would be like a hernia surgery. That would be a tier 4, okay? A tier 1 surgery, that's neurosurgery. That's heart surgery, right? Brain surgery, heart surgery. You get $10,000, okay? $10,000 for that surgery, which, probably isn't going to be enough. If you have a brain surgeon, they're going to do the work for you because they know they got $10,000 coming from UHC, but you're going to have a bill on top of that, right? And as you guys know how Philly works with the Medicare schedule, and we're not going to get into the benefits of the Philly plan. But anyway, that's the surgery schedule. I would love to see UHC match the surgery schedule with that Philly does and Manhattan Life actually is doing it now. So some other carriers are picking up to, catching up to the benefits that Philly offers. But, you know, wouldn't that make this a killer plan, right? Because the per day in the hospital is solid. It increases every year. For accidents, you've got 10 doctor visits at $100 a year, which is usually more than enough. Again, guys, our customers are healthy people. We're not trying to sell this to somebody who's got to go get blood work every single month to monitor their diabetes. So you get $100 each time you go to the doctor, 10 visits a year. And if you had, you know, double the Medicare surgery schedule, you know, it'd be a killer plan, right? It's still not a bad plan. It's a good plan. The only thing that's a little rough is the surgery schedule. So, and I'm sure you guys agree, you know, 10,000 is not going to be enough for a neurosurgery or cardiac surgery. But those are the benefits. All right, guys. Doctor visits, we already talked about. Wellness, you get a wellness benefit each year. That's per person. So again, the primary preferred, most popular plan. So $250 benefit for wellness. Okay. That would be your physical, female exams, things like that. There is a 6-month waiting period on the wellness. Same thing as Philadelphia American. Doctor visits, sickness doctor visits. I think there's a 72-hour wait on the 5-day waiting period. So 5-day waiting period on the doctor visits. Okay, so, you know, obviously somebody's sick, they can't buy the plan, have it go into effect the next day, go to the doctor and cancel the plan. So that's why they do that, guys. So 5-day waiting period on doctor visits, 6-month waiting period on the wellness benefit of $250. Okay, which is a good benefit, guys. $250 is going to cover my physical every year, right? Now, it might not cover a mammogram and pap smear fully, but if you have that multi-plan, you go to a doctor that accepts multi-plan, they're in the PPO network, you get the discounted rate of, you know, 70% or call it 50%, right? The average is 50%. You know, and it's a, you know, say it's a $600 worth of, you know, mammogram, pap smear, $600, discounted rate down to $300, and you have a $250 benefit, and your out-of-pocket's only $50, you know, your insurance works, right? So $250 is a very solid wellness benefit, okay? And then you've got some prescription benefits, okay? And again, keep in mind, guys, these are benefits. These are not copays, okay? The difference between a copay, that's a fixed cost, all right? A copay is a fixed cost that you pay for those drugs or that doctor visit, right? So when we were looking at the short term that had $50 copays to the doctor, you go to the doctor, you pay $50, okay? And agents tend to confuse this all the time, all right? So that's why I'm stressing it. That's what a copay is. If this said copay, right, then that would be what you pay. You'd pay $20 for a generic, $40 for a brand name, all right? But that's the benefit. So if you're prescribed a brand name drug, you will get a $40 benefit, okay? Plus whatever script discount is available with your plan. All these plans now come with script saver discounts. You know, here you can see right here, prescription drug discount card. So you automatically get a discount on the prescription just for having the insurance. And then in addition to the discount, you get the benefit, all right? So what else do we got here? Your testing benefits, outpatient testing, diagnostic testing, all right? Lab work, that's a good benefit, guys. $100 for 3 tests a year for lab work, you know, that's pretty good, right? Diagnostic testing, $500 per test. You know, that would be like an X-ray or not an X-ray because you got X-ray up here for 100. That would be like an MRI, you know, imaging services, anything that falls into imaging services for diagnostic tests. You get $500 in benefits. Usually going to cover that pretty well, right? Outpatient radiation chemotherapy benefit. They just added this recently. Got to have it, right? Most people get diagnosed with cancer. They're going to their chemo radiation treatments, once a week or once every few weeks or however it works. But they've just added this benefit, I think, in the second part of last year to these policies. So very, very good policy to have, or very good benefit to have, excuse me. All right. So, and then you're just breaking it down a little differently here. But, so guys, Health Protector Guard, okay, this is a rock solid limited med product, all right? And when you're selling short-term medical versus limited medical, you want to ask the customer what's important to you, right? I mean, are you, younger people, it's probably more important to have their day-to-day stuff covered, their doctor visits, their routine lab work, their wellness. Somebody who's a little bit older, right? Maybe in their 40s or 50s or 60s even. It's more important for them to have that big claim covered, right? So you kind of, you ask your customer, what's more important for, to have coverage for? Is it first dollar coverage and get all the little stuff paid for, right? Or is it, you can pay the little stuff out of pocket. You want to make sure you have coverage for that heart attack, that stroke, that cancer. And then obviously the best of both worlds is to have coverage for both, right? So, again, in our insurance agents have gotten very, very, very creative when building health insurance policies for our customers, and making sure that we give them as many benefits as possible. So, guys, at the end of the day, yes, it comes down to what they, are mostly concerned about having covered, but also what they can afford, right? If money's not an issue, you load them up with benefits, man. You give them a limited med plan, first dollar coverage. You give them a short-term medical, short-term major medical on top of that, which gives them their major med component. You can give them a high deductible. Now they've got the best of both worlds. Now they're covered on the first dollar for the doctor visits, the lab work, the wellness, and they're covered, over and above for the major claim, right? Guys, I want to go through one supplemental product. UHC has critical illness products. They've got accident products. They've got vision, which is a great play to sell standalone vision. They've got dental. But you're going to just see a lot of the same when it comes to, critical illness plans and dental plans. And, and so you guys should have a good understanding of how these plans work. But I want to go through this supplemental product, which is a pretty solid supplemental product. It's an accident policy with a critical illness benefit, with an AD&D benefit, which is accidental death and dismemberment, and a hospital admission benefit, okay? So you will have the option to choose the benefit level for the accident benefit, okay? You have a $250 injury deductible, okay? So again, very similar to the plan enhancer with National General. You have an accident or injury, you got a $250 deductible, right? Whatever level you choose for the accident benefit, the critical illness benefit is going to mirror that, okay? So if you choose a $5,000 accident benefit, you're going to get a $5,000 critical illness benefit, okay? And then obviously you've got the accidental death benefit, which is going to mirror the initial benefit that you choose, and then it's a straight $2,500 admission benefit, okay? So again, you look at, let's say you're selling short-term, right? You're selling short-term and, you're selling a copay select plan, or here, I will do a copay select A, which is the $2 million plan. It's $5,000 deductible, 80/20, maximum out of pocket is $10,000, right? So you would want to sell well, you wouldn't have a $10,000 benefit to cover their full out of pocket, but you'd want to sell, an accident benefit, an accident pro gap plan, which will cover the bulk. It'll cover all their deductible, right? It'll cover the bulk of their co-insurance. You'll just be responsible for $250. Same thing on the critical illness. And if you're hospitalized, you get a $2,500 benefit, which, so again, it would reduce your $5,000 deductible down to $2,500. Guys, I could go on and on about how you can build these plans and how you can structure these plans. You know, again, this is just meant to give you an overview of the products that are available. And then on a more one-on-one basis, you know, you reach out to us and we'll, you know, show you how to structure these policies and obviously how to present them to the customer. But you can see UHC's got all the angles covered, right? And this is, I'm not even showing you guys all the supplements that they have available. So the two main plans, though, that we sell through United Healthcare is the short-term med and the Health Protector Guard. Personally, I think the short-term medical is the strongest on the market, beats the NatGen product, I believe, you know, because it's got the $2 million lifetime maximum, and then obviously you can add copays. It becomes a pricing factor then at that point. And the Health Protector Guard, very, very solid limited med product, but you guys obviously know my feelings on limited med and who has the best product on that market, which would be Philadelphia American. So, but again, guys, customer wants brand name. The UHC is going to be their brand name option. All right. All right. So let me show you guys how these all come together in the portal. All right. So you'll get your username and password. You'll sign in. And you can, you know, click the orange button here and go right to get a quote. Now you're talking to a customer and they want to, you know, they want to get a price. So here's the TriMed product that I was telling you guys about, the 3-year. So it is Arkansas and Georgia where they've rolled it out. Guys, they are marketing this as major medical. And the way that the UHC rep put it, I was at a conference, you know, a couple weeks ago. The way that the UHC rep put it was, they literally are taking their old major medical product, dusting it off the shelf, and refiling it with the states and putting a short, you know, a 3-month term on it. So they're marketing it as major medical. I mean, we're going to see a lot of products come out, you know, over the next, you know, between now and open enrollment, we might see some new products come out. Next year, for sure, we're going to see some new products come out. You know, we're going to see major med products that, you know, that we marketed pre-Affordable Care Act. So, you know, it's really shaping up to be two levels, right? You have your marketplace, which, you know, if you need coverage for pre-X, you go to the marketplace. If you don't need coverage for pre-X because you don't have pre-X, you just need a plan that's going to cover that unforeseen accident, that unforeseen illness, you're going to have the, you know, major med options outside of the marketplace to go purchase those. So very exciting stuff coming, guys, in terms of products. You know, but again, right now they've rolled it out in Arkansas and Georgia, and they're beta testing it, getting all the kinks out, and we'll see it available in more states in the you know, weeks and months to come here. So, all right, so let's look at how you guys quote this stuff and enroll. So get a quote, pretty self-explanatory. All right, just like any other platform, you're going to enter some demographic information, may or not ask you for a county. All right, let's put our typical family in that we use. And let's put a child in there. All right. All right, guys. So now here's the entire portfolio of products. Okay, you've got short-term plans, right? And you've got the 8 options here, 4 of which are 600,000 annual maximums, 4 of which are $2 million, lifetime maximums. Hospital and doctor fixed indemnity, that's your health protector guard, that's your limited med, all right? You got a half a dozen options on that plan. We just went over them. Dental plans, we're not going to look at, guys. Dental plans are dental plans. I'll leave that to you to take a look at. Accident ProGuard, and we just looked at the Accident Pro Gap plan. So obviously you can add that. And then you got other, supplemental products, vision plans, supplemental hospital plans, discount cards, teledoc. It's all, it's all written out for you, obviously, self-explanatory. So we're going to build short-term plans and health protector guards, all right? So short-term plans and limited med plans. You can choose 4 policies to compare, all right? So I'm just going to pick the copay select. I'll do the copay select A. We'll do the value select and the plus elite, all right? Which I think is 2 $600,000 plans and 2 $2 million plans. So yeah, so you can see, actually this is a $600,000 plan too. Let me go back. I want 2 $2 million plans. The names get confusing. So value select, plus select, copay select, and plus elite. Okay. I think we got it. All right, so 2 $2 million plans, 2 $600,000 plans, all right? And you guys will see here, you get to choose the deductibles. Choose the deductibles. 5,000 is pretty common. Some of these options are going to let you choose the coinsurance and the out-of-pocket maximum on the coinsurance. So if I did $5,000 deductible, 80/20 with a $5,000 coinsurance, your maximum out-of-pocket on this plan is 10 grand. Okay, you got to add your deductible and your coinsurance. Okay, same thing with the first 2 options because the $5,000 coinsurance is set for me. Okay, over here, which is going to be the most expensive probably, is a $5,000 deductible with 100% coinsurance. Okay, so the maximum out of pocket on this plan is 5 grand, right? All right. Actually, the copay plans are more expensive than the lower out-of-pocket plan. All right, so you're going to choose the days of coverage, right? We're quoting in Illinois right now, so it only goes up to 180 days. It's automatically going to default to the maximum amount of days that are available. So if I was quoting in Georgia, it's going to give me a 364 option, but it's going to auto-renew 2 times. It's a 36-month plan, all right? You're going to pick your effective date, and then obviously you'll have the end date. Customers are going to pay monthly or have the option to make a single premium payment, okay? And you've got your rates, okay? And you can choose, to add the things to cart and move on to enrolling them. But I wanted to, just show you guys how you can pick and choose some of the benefit levels here. If you're looking at this, okay, what do you think would be the best option for your customer? And then, think about that for a second, and I'll tell you what I would do, okay? If you look at, you got $262 a month for a $5,000 deductible and 100% coverage after the deductible, no coinsurance, okay? So it's a 100% plan after the deductible is met, all right? If you look at, over here, first of all, it's double the out-of-pocket because it's $10,000. You got to take the $5,000 deductible plus the $5,000 coinsurance. So this is a $10,000 out-of-pocket plan, and you're looking at $50 copays, okay? So that would be, and they're both $600,000 plans, right? Both of them are $600,000 plans. So the copay really adds some significant premium to the cost. You're looking at a, what, $70 difference, $72 difference. So you're going to pay an extra $72 a month just to pay $50 when you go to the doctor, right? Or you could save $72 a month and pay a discounted rate and have whatever you pay come off your deductible. And that discounted rate, as long as you go in network, remember we said is 9 times out of 10 under $100, right? So in other words, you're prepaying with this plan. You're prepaying for doctor visits, right? That you may never use. Okay. So if I'm talking to a customer, I'm going in full head of steam with this policy here. Okay. The $5,000 deductible, 100% coverage. All right. Now, if money is not an issue for my customer, I might take this policy and add a zero deductible feature to it, which would be the hospital indemnity, right? Obviously, I would like to get supplemental products in there to, bridge the $5,000 out-of-pocket costs, right? Want to give them full coverage for the majority of things that we can give them full coverage for, okay? But again, when I tell you guys the best of both worlds, and again, it does come down to cost, obviously. You can pick any one of these, pick the lowest level, don't matter. $2,000 a day, you spend 2 days in the hospital and most of your $5,000 deductible is going to be paid, right? So for this family, here, show you guys we'll choose a couple health protector guards and see which one's going to be the best. So we've got, obviously I'd add this one to cart. Let's look at the details. So this is the $1,000 a day, okay? It's $1,000 a day if I'm admitted into the hospital. So if I'm there 5 days, obviously my full deductible is going to be paid for. But it's not so much about that hospitalization as it is about the first dollar coverage on the doctor visits, on the prescriptions, on the lab work, on the wellness. All right. So if we took this plan and added it to the cart, and it's going to ask you, do you want vision? Do you want, this discount card, teledoc, all that stuff? We want to keep shopping. Go to our short term. We want to add our short term to the cart. 5,000 deductible was $262. That was the price that we got. So now for $484 for this family, we've got them the best of both worlds. And again, guys, I could build policies a million different ways, and you guys will, right? I've literally, there's no right way to do it. All right. There's no one single right way to do it. There's a million right ways to do it. All right. But your goal when building a health insurance policy for your customer is to, your goal is to limit their exposure, their out-of-pocket exposure as much as humanly possible. All right. And the way you're going to do that is obviously by getting them supplemental products. Supplemental products are going to be first dollar coverage, or bundle a limited med plan with a short-term med plan, give them that major med component. So again, guys, there's just so many ways to build a policy. I could train till midnight tonight about building policies and what might be the best option for any one customer, but that's for you guys to determine. All right. What do you believe is going to be the best option for the customer? And that's what you present. And then you let the customer tell you what they like about it, what they don't like about it, what you need to change, right? So let's just say, customer likes the fact that we're giving them a limited med policy, one of the best on the market, zero deductible plan. We're giving them a short-term major medical policy in addition to the limited med policy, and we're giving them the best of both worlds, right? We've got them covered for the small stuff, first dollar coverage. We've got them covered for the big stuff. God forbid something crazy happens, right? Now they want to buy. So we're going to, you could send the cart to the prospect directly and let them fill out the application. As a broker, you probably want to take the application as far as you possibly can with that customer on the phone. So I would start a broker-assisted application, okay? It's going to ask for your customer's name. And the application will pop up, all right? Basic information, 5'7", 230, occupation, sales, wife, Latoya, birth date, wife 5'4", $1.25, email address, yada, yada, yada. Lucy, she's probably 3 foot, 35 pounds. Resident address. All right. Beneficiary, you guys can see all the plans ask for a beneficiary these days. Name the person who would receive any accrued unpaid benefits in the event of your death, right? If you're, you've got indemnity benefits coming to you for a hospitalization that you never make it out of, somebody's got to get paid, right? So my wife would be my beneficiary. And we go on to the next one. What is this? The address you entered was not found in our database. Continue as entered. It's because it's actually in Rolling Meadows, but anyway. All right, now you've got your health questions, guys, just like any other application, okay? You're going to go through your health questions with your customer. Have you had this? Have you had that? Has any applicant had diagnostic testing or surgeries recommended that have not yet been scheduled or completed? All the typical questions, right? Short-term questions. Some of them are going to be redundant, but when you're doing multiple applications, you're going to get multiple questions. Okay. Here's where you're going to be verifying their payment schedule. Okay. You can, make sure you give them the heads up of the $4 fee that's going to be added to the premium or any other fees that are added. You want to let them know of the application fee. All right. So what their monthly payment's going to be, as well as the initial payment. Okay. With the fees added and everything. All right. Continue. Credit card, EFT. And put their checking information in or their credit card information. This part should be pretty self-explanatory to you guys. I just wanted you to see the app and how it's laid out. If a customer doesn't want to give it to you, you can actually, at any point, you can stop the process and send the application to the prospect and let them finish on their end, okay? I'm not going to continue any further and actually submit the app because I don't want a dummy app clogging up our system. but this is where you would put their information in, continue, and then from there, you're going to spit the online verification over to the customer. Now, UHC has, you could do an email, which will, they can verify their application via email. They also have a text messaging feature to sign applications. And I'll be honest with you guys, I'd love to walk you through it right now. I've just personally never done it. So what I will do is I will get one of our agents that sells a ton of UHC that does use the text message feature onto one of our sales meetings to walk you guys through that. But pretty cool feature. I mean, people can verify their health insurance application via text messaging. It doesn't get much easier than that. And if you guys have been selling over the phone for a while, sometimes, not all the time, but sometimes, applications get caught up in this phase because a customer just, it slips their mind to sign their application. They feel like everything's done. Remember, a deal is not fully complete and closed until you have the customer's signature on their end, okay? Now, you can submit 1 million deals, okay, with billing information. But if the customer is not signing it on their end, it's not getting paid out, okay? So you get them to this point and you send their application to them either via email or text. You better, let them know, hey, you got to verify this thing. You got to sign it on your end. And guys, it's pretty, it's pretty self-explanatory when they get the email on what they need to do on their end. Click here to verify your benefits. Some of them use a DocuSign, sign with their finger, things like that. So anyway, people are getting, it was tough, when we first started selling over the phone back in 2006. And people had to walk them through the online verification and everything like that. But here we are in 2019 where people are not, they're not as tech foolish, as they were 13 years ago. All right, guys. So people usually don't have a problem signing their applications or knowing how to sign their applications. And if they do, that's what you guys are there for. All right. So that's the application, and then once it's done, it's going to, and I'm going to go ahead and just exit this. Once it's done, it's going to show up in your broker-assisted applications. You've got, you'll have applications in process, applications not started. You can track your leads through this portal that you're working. Applications that are expiring within 10 days. So, if you start an application with a customer that you don't finish it, they will have an expiration date on it. You have to start over. You can look up your prospect list and all your business customers that are on the books, right? So if we want to look at, let's see here. It's been a while since I've written any business with them. If I'm talking to Darius Moore and he's got questions about his vision plan, I can pull it up in the My Business link, all right, and talk to him. So guys, there's nothing really, there's not a whole lot more than that to go over. It's not rocket science. You literally just have to get into the portal and play with it. And, like I said at the beginning of the call here, these UHC contracts, we're inching closer and closer. I got to hand it to them over there, though. They did say, up front that they don't do anything fast, and it's not going to be a fast process. And they weren't kidding. So, but we will get UHC contracts to you guys as soon as possible. And be all good, and then once you get your portals, you can go into your portals, play with the quoting, send some quotes out, and start building United Healthcare into your portfolio. It's certainly going to have a very significant play And it always does. In every agent's portfolio that we work with to this day, UHC products are something that are being sold on a regular basis. Whether you're going as National General or your lead-in is Philadelphia American, and you're still going to sell some UHC, right? Because they have the standalone vision plan. You can see a lot of that. I sell a lot of the standalone vision plan. The Health Protector Guard is a very solid product with the brand name. So you're going to sell UHC. It's just inevitable, all right? All right, guys, so that's going to conclude the training portion. What I want to do is give you guys the opportunity to ask some questions. You'll actually have to type the question in because on this WebEx account, I don't think I can unmute everybody. So if you've got some questions, let me go to my chat box here. Okay, let's see here. Oh, there's several in here. Okay, Lou, put them together like a wraparound. We're doing that through Philly, short-term plus indemnity. So I'm sure you caught on to that. It's the best of both worlds, man, right? Lou says, why not put them together like a wraparound? We're doing that through Philly. Exactly. Yeah, it really is the best of both worlds. You've got the first dollar benefit and then the short-term policy on top of it. They've got zero deductible plan plus a umbrella plan that will cover them in the event of something major happen. Okay, what else? That's the only question I've got right now. Guys, if you have questions, do me a favor, open your chat box, type them in. Is the information on the portal about the plans? Yes, and I'm going to load all of the brochures into the back office. So we'll get the UHC brochures into the back office by the end of the day. That'll be a very simple task to get done. I've got my marketing guy in here, and we'll get that done. How do we get appointed, and what is the date? We will get appointed hopefully next week. We're waiting on contracts from United Healthcare. We just had the agency contract approved this week, so hopefully we get agent contracts to you guys by next week, so stay tuned. Turn